And joining me now is Eric Sheridan, Managing Director at Goldman Sachs. Eric, thank you for having me to the conference. Again, really enjoy being here. And you cover a lot of the companies that the Yahoo Finance community follows religiously and they love. But before I get into some of these tickers, what is the appetite to own some of these big cap tech stocks, given the runs they have seen this year? And in many respects, they're trading on peak multiples.
Yeah, I think it depends on the name, but generally I think there is a view that owning large-scaled technology companies that are going to produce compounded returns is an area of focus in the market right now. So of all the companies I cover, I would say investors are playing offense on all of those names. But among the larger names, especially the ones that can be valued on GAAP earnings, the Metas of the world, the Alphabets of the world, there is an increased focus of being able to buy compounders at reasonable valuations against earnings power. And then you have the emerging players like Amazon and Uber that are large-scale players, but are still in the process of growing into their GAAP earnings. And that's attracting a certain type of investor that's interested in growth at sort of a rising profitability narrative. And I think those are the two interplays we get in terms of talking to investors.
When you talk to investors, are they worried about what the Federal Reserve does? Because the thinking is higher rates, bad for tech stocks. And if the Fed is out there next year raising rates, tech stocks, maybe they don't do well.
Well, I think we went through a process of investors absorbing higher rates for longer at the end of last year and the first half of this year, and you saw a very aggressive reset of valuations in technology in the second half of 2022. We think that reset has mostly happened at this point, unless there is a change that 5% rates plus or minus are going to be the new normal. If we end up with higher rates than that, we'll have to go through another valuation reset probably for the broader group. But our house view, and Jan Hatzius, our chief economist, was here yesterday from Goldman Sachs, would be that the recession probability is coming down and the Fed is unlikely to raise rates anytime soon in the next couple of meetings. So that's our Goldman Sachs house view as published by Jan.
All right, let's go into some of your companies that you cover. Let's start on Amazon, because folks on our platform are waking to news that maybe Amazon is broken up. There's a lot of concerns about what the FTC does to Amazon or doesn't do. Do you think Amazon gets broken up, and what does it mean to that stock?
We still put a low probability on that. We do use a bit of a sum of the parts valuation in terms of looking at Amazon, because Amazon is in very different businesses. Historically, we have written that we don't see any antitrust concerns between the consumer business and the cloud computing business. Without knowing what the FTC is going to allege, the press is reporting that some of it is around behavior inside their e-commerce business, the way they use the Prime subscription to incent behavior on the consumer side, and the way in which their third-party seller business interacts with their first-party seller business. Without knowing the details, it's tough to know exactly what they're going to allege. But those are some of the examples of areas we think they're going to examine and continue to examine from an antitrust standpoint. We do highlight, though, that Amazon still is a relatively small percentage of overall retail sales in the United States, and still a much lower percentage than that outside of the United States. So still a long way to go on e-commerce penetration.
Does this issue, though, hang over that Amazon multiple like a black cloud?
Look, anytime something regulatory comes into the headline, it's going to be an overhang. I will tell you, until this lawsuit probably gets filed, the next 3 weeks will be investors asking me, what do you think is going to be in it? What do you think the potential outcomes are?
I'm warming you up here for those questions, Eric.
Exactly. Okay. And unfortunately, folks like myself won't know until we see it. So that, in effect, I agree with your hypothesis, that will act as an overhang over the next couple of weeks, probably.
Fair enough. Another name you cover, buy rated on Meta. It has been a big year for this company. The stock has gone through the roof. You have had Meta really drill down on costs. The street likes it. The top line has started to improve. What does next year hold for this stock and also a company like Meta?
Yeah, so they're still in the process of going from some of the consumption shifts we saw towards short form video, messaging, and other platforms now to being monetized. So you're seeing that reacceleration of revenue at Meta. We think you're going to continue to see revenue reacceleration all the way through the end of this year into the beginning part of next year. That's the first catalyst on Meta. Second is, while this is the year of efficiency on costs, as talked about by the CFO, Susan Lee, and by Mark Zuckerberg, you're still going to see the benefits of incremental operating margins next year, not just this year. So we would tell you you're still going to see earnings momentum. The third is going to be an interesting catalyst. At the end of this month, they're holding their Connect event, and we expect Meta to put on display a couple things. the output of some of their AI efforts and how they might be consumer and user facing going forward, and some of the metaverse initiatives that have been a big drag on profitability and a lot of the losses as they break that segment out. But now you're going to see some of the products, which sets up for an interesting dynamic next year for technology. You're going to continue to see Meta putting out virtual and augmented reality products under the Quest brand, and you're going to see Apple launching their Vision Pro product early next year as well, which sets up as an interesting product dynamic for technology into 2024.
Some would say Meta's revival this year has come come in part because of what's happening over Twitter/X or X/Twitter, whatever it is. Is Twitter just a non-factor at this point in social media? And then do you crunch the numbers on what a company like that is worth? Do you even go through that exercise anymore?
We typically don't value private companies. We haven't valued or talked about that for Twitter since it was acquired by Elon Musk. Twitter, though we have written in a number of our research reports as we've done work on the advertising sector quarter in and quarter out, Twitter has been a share donee of ad dollars. We've written about their ad revenue, even though they're a private company, being down 50 to 60% year on year. That's about $2 to $2.5 billion of dollars donated back into the broader advertising landscape. But that in and of itself is not why Meta is reaccelerating. It's really elements about unlocking revenue potential in short form video and on messaging via Facebook Messenger and WhatsApp.
30 seconds left. Your biggest stock call for the next 12 months.
Amazon is our number one pick, followed by Uber. We see rising utility, rising profitability, and as they grow into GAAP profitability, we see a lot of interest in those shares going forward.
Good calls indeed. Thank you for having us to the conference again. Really enjoyed being here. Eric Sheridan, Managing Director at Goldman Sachs. I know you have a busy day on tap. Thank you so much.
Thank you.